No fear of missing out and sometimes just being plain boring. It's what made Warren Buffett one of the most successful investors in history. In fact, anyone can invest like Warren Buffett. His strategy is centered around the principle of value investing. Finding companies that are undervalued, focusing on long-term earnings, not short-term growth. In other words, buy businesses, not stocks.
If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year. We care a lot about the price. We do not care about the next 12 months.
Batteries and paint. Not sexy companies, but guess who owns Duracell and Benjamin Moore? Buffett's Berkshire Hathaway. Buffett invests in companies that have a competitive advantage, a remote, as he puts it.
I just think of basically the utility of those products to a ecosystem that is demographically terrific and finds that instrument useful in dozens and dozens of times a day. It's almost indispensable, not only to individuals, business, I mean everything.
Buffett also invests in companies that are easy to analyze. He knew the value of the membership subscription model long before Amazon Prime or Netflix. Berkshire has held Costco for decades. Buffett says he buys what he knows.
The fact that you're missing out on 90% of the stuff doesn't really make any difference if the 10% you do is right.
To invest like Buffett, buy what you know. Buy a business, not a stock. Don't be afraid to be boring, and be patient.
Buffett took control of Berkshire Hathaway 60 years ago in '65, and in that time, the conglomerate is up nearly 700 times more than the S&P 500. That's some 4 million% compounded. Yesterday, we looked at Berkshire's top 5 holdings, and we're looking at some of the biggest sector holdings today. So here's how Buffett's portfolio stacks up sector by sector against the S&P 500 as of the end of last year, 2024. You can immediately see how financials dominate at 39%, almost triple the index weight. Tech, once his largest possession, is now a bit underweight. After trimming Apple and checking out consumer staples and energy, guess what? Those two have significantly higher and outperformed the broader market. Now, Buffett is a fan of concentrated portfolios with those with stock-picking skills. So it's no surprise to see that Berkshire's holdings, they trail in sectors that he doesn't favor right now. So let's explore some of those top sectors. And first up, financials. We're going to go back to that. That is the white line here, and it is Buffett's largest sector at 39%. Not a surprise, since Berkshire itself is classified in the S&P 500 as a financial company. That has a lot to do with Berkshire's Geico Insurance Company ownership, which I should note is not included since it is owned outright. Today, we're only looking at portfolio holdings here. Now, Buffett made an iconic bet on Bank of America coming out of the global financial crisis in 2011, and he's also held American Express since the 1960s. He also likes financial data firms like Moody's. Now, let's shift over to tech, because this is interesting. Back to our chart in green, we have Buffett's tech holdings. They are topping out at over $170 billion in 2023. That's a peak there, and that's thanks to his huge position in Apple. Now, Buffett shocked many in 2016 by investing in Apple, calling it the ultimate consumer brand powerhouse. But he substantially trimmed that stake last year and the year before to about $75 billion. Now, Buffett has also been pretty honest about some of his tech missteps as well. If you remember Big Blue, beginning in 2011, Berkshire acquired about a 5.5% stake in IBM. But by 2018, Buffett threw in the towel, saying, "I was wrong about IBM." He also recently sold out of another tech bet, Snowflake. Now let's shift over to staples, because that is Buffett's comfort zone, and that's in blue here. You can see his dedication as he sips his can of Coke on stage, and his iconic Coca-Cola holdings, that goes all the way back to 1988, and he's never sold a single share. See's Candy, that is another favorite of his, wholly owned by Berkshire, and it's given him steady profits since the 1970s. But Buffett admits that even he can misprice a seeming bargain, like with Kraft Heinz. After a painful $15 billion write-down in 2019, he famously said, "I overpaid." Finally, we have energy, and this is in orange. Buffett has been building a huge position in Occidental Petroleum since 2019, but here's why most of us cannot copy Buffett. He got a sweetheart deal with preferred shares paying an 8% dividend, and that is an example of Buffett-level leverage. Chevron's also a big holding, picked up in 2020 for the dividends and simple economics. And yes, Buffett has made mistakes in energy too, like ConocoPhillips in 2008. And this reminds everybody that commodities can burn even the best investors. So after 60 years, Buffett's magic is simple. Buy great brands, be patient, admit your mistakes, and let time do the rest.
I think Warren Buffett is definitely considered a patient investor, and when you take a look at how Berkshire Hathaway shares have performed since 1965 against the S&P 500, you certainly see that patience pays, right? Berkshire Hathaway stock has increased over 5 million% going back to 1965. That's compared to the 39,000% that you see for the S&P 500. I mean, the chart is candidly just pretty staggering when you take a look at the difference in performance there. And I think I was looking through also just the different years that Berkshire has either outperformed the market, underperformed the market, kind of trying to get some takeaways from within that. And what I found interesting within that within there, they include this in their annual shareholder letter. And within that, you see that most times that the S&P 500 has fallen, I counted about 13 going back to 1965. Berkshire's only underperformed the S&P 500 in those years twice. So sort of my takeaway from that being, speaking of patience, one thing Buffett's always done is he's not always fully invested, right? He was talking a lot about this on Saturday, not the need to not always be putting all of your money to work, which is not necessarily how most fund managers would operate. You don't give Berkshire a pile of cash and they have to go invest it for you, right? He's waiting and choosing good investments and choosing the right time to buy a company. And I think over time that's paid off. And then also not selling winners, right? He's held on to American Express forever. He's held on to Coca-Cola forever. Yes, he started selling Apple, but he held on to Apple for about a decade. And so just the compounding nature of holding on to those stocks for a long period of time shows that picking stocks to some extent can work, I guess, at least if you're Warren Buffett.
Buffett made billions over the years with his value-focused, long-term approach to investing in stocks. So let's take a look now at how Berkshire Hathaway's top holdings have evolved over the years. I'm Jared Blickery, host of Stocks in Translation. Most of Warren Buffett's bets have had a rocky start to the year, along with everything else. Berkshire's biggest position, Apple, has shed $13 billion, with smaller losses in American Express, Bank of America, and Chevron as well. But consumer staples, Coca-Cola, it is up $4 billion. And let's now dig into some of the details. Berkshire first bit into Apple in 2016, with Buffett calling it the ultimate consumer brand powerhouse. At one point, Buffett owned nearly 1 billion shares. He's since cashed in on some of those gains, trimming back recently, but at $75 billion, Apple's still Berkshire's biggest bet. Not bad for a guy who actually avoids tech stocks. Buffett first swiped into American Express in 1964 during the legendary salad oil scandal. Look it up if you're interested, and talk about buying the dip, because he has held ever since, owning a fifth of the company. Buffett calls Amex his gold card, and a nearly $40 billion plus holding he has no plans of giving up. In 2011, Buffett bet big on Bank of America, $5 billion, when bank stocks were decidedly not popular. He turned warrants, which are essentially long-term stock options, into big profits, eventually holding over 1 billion shares lately. He has cut back a bit amid bank sector worries, but at nearly $30 billion, it remains a textbook MBA case in contrarian investing coming out of the global financial crisis. Now, Buffett first popped open Coca-Cola stock in 1988 and has not sold a single share since. He calls it his ultimate forever stock. And at about $25 billion today, it has been a decades-long case study in dividends, brand power, and patience. His love for Coke is almost as legendary as the drink itself, and you can see him sipping it over the weekend at his final Berkshire meeting as chief executive officer. Finally, Chevron is a newer addition. First fueling up in 2020, Buffett quickly pumped up his stake to around $30 billion, attracted by strong dividends and then solid profits. Recently, he's trimmed back a bit, but with around $17 billion invested, Chevron is still a key holding, a classic Buffett bet on dividends and fundamentals in a sector that's easy to understand. Everyone needs oil and gas these days.
Warren Buffett says the time has arrived to begin the CEO succession plan for Berkshire Hathaway. The 94-year-old investing legend plans to hand over the position to Berkshire's vice chairman, Greg Abel, at the end of 2025. Buffett has been CEO since 1970 and has been planning the transition for years. In his 2014 annual letter, Buffett outlined the qualities someone would need to be the next CEO. One of them being the ability to make money in excess, but not get greedy and chase bigger paychecks just to keep up with other executives. Buffett famously makes a salary of $100,000 a year at Berkshire, a figure that hasn't changed in over 35 years, according to an SEC filing. He also doesn't take bonuses. To compare, NVIDIA CEO Jensen Huang will make a base salary of $1.5 million in fiscal 2025. But don't get the wrong idea, Buffett is worth billions of dollars due to his share ownership in Berkshire Hathaway. Buffett is the 5th richest person alive, according to the Bloomberg Billionaires Index. He has a net worth of nearly $169 billion, trailing other big tech CEOs like Elon Musk, Mark Zuckerberg, and Jeff Bezos. The majority of Buffett's wealth comes from his 37% stake in Berkshire Hathaway, worth around $167 billion. In 2025 alone, Buffett's net worth has grown by $26.6 billion. That is a significant gain amid recent market volatility that's hit the net worths of many other billionaires. Berkshire Hathaway has outperformed the S&P 500 so far this year, bolstered by the firm's diversified portfolio of owned businesses and equity investments.
Berkshire Hathaway's board voting unanimously to name Greg Abel as Warren Buffett's successor. Abel will take over as president and CEO of the company starting January 1st of 2026. Buffett's plan to step down after 60 years at the helm was just one of the biggest takeaways from Berkshire Hathaway's annual shareholder meeting. Our next guest, Sam Rowe, he is the ticker.com editor. He was on the ground this weekend, and we're going to discuss with him. Sam, great to have you here. I love getting your insights. Talk to me about the reaction in the room when Buffett announced that he would in fact be leaving the top position at the company by the end of this year. What did you hear from folks on the ground?
Well, yeah, I mean, initially it was stunned silence because, if you listen to his words carefully, he didn't say, I intend to retire. He says, I think it's time for Greg Abel to become CEO. And so your brain has to sort of, make some logical jumps there to say, well, if Buffett's the CEO, then that means Buffett has to retire. So, the wording was really interesting. And yeah, it was stunned silence. But I think, as much as it came to a shock for a lot of people, it's also something that's been in the works for an incredibly long amount of time. First of all, he's 94 years old. You're never going to be surprised to hear when a 94-year-old decides that he's going to not only retire, but retire at the end of the year. And the other thing is the Berkshire succession planning has been one of the most carefully thought out, communicated, transparent processes, maybe in the history of corporate America. We've known that Greg Abel, he became a, vice chair of Berkshire Hathaway, I think in 2018. And so we've known him for a long time. And even in 2021, Buffett and Munger actually announced their intention to elevate Abel to this position. So all that said, of course, when, you've been following someone for 60 years, or, much less for me, and I'm sure you guys too, but like our entire careers, for a lot of people, their entire lifetimes, they've seen him as a fixture at this company, who's also been giving all this wisdom to everybody. So yeah, it's definitely a surprise.
And so, Sam, is there a material difference that we anticipate or expect at all between the trading ideologies as instituted by Warren Buffett and Charlie Munger for decades, for 60 years, versus those of Greg Abel?
Yeah, I think there's two ways to think of this. Inevitably, it's going to change. But that's actually kind of been the history of Berkshire Hathaway and Warren Buffett and Charlie Munger themselves. From a corporate standpoint, the company was founded as a textile company that evolved into an insurance company that evolved into this multi-global conglomerate that also has this big stock portfolio. So that company's business has been changing forever. And then even just strictly from an investment perspective, Buffett started out as this guy who, did quote unquote cigar butt investing, finding extremely undervalued companies and stocks that he believed were trading below their fair value. But then that ideology actually evolved into something where that gave him gave him an excuse to buy stocks like Apple. So I think change is actually inherent in this company's culture. That said, again, Abel has been next in line to be CEO for years, and he's actually spoken at the shareholder meetings right next to Buffett. So, if there's a question to be asked now is, well, how much of the past couple of years have actually been determined by Greg Abel's decisions? I'm sure a lot of it has already.
And Sam, investors were anxious to hear Warren Buffett's commentary specifically on the development of the trade war, which he said trade should not be used as a weapon. And he did say that it is a, quote, act of war. Talk to me about how that impacts your thinking on the impact of the trade war on financial markets as you are writing about the impact of the trade war on financial markets.
Yeah, as blunt as Buffett was when he was talking about trade and trade policy and how it should be implemented, I don't think he actually said anything particularly controversial. Protectionist trade policies is negative for everybody, and especially when you're using it not to advance your economy and not to, build wealth for everybody. But if you're using it as a tool to advance your political interests, then yeah, you're weaponizing trade. And as Buffett said, it can be interpreted as an act of war. Protectionist trade policies hurt economies. So, what happens when you hurt economies? People get unemployed. They can't afford groceries. They can't pay their healthcare bills. Crime goes up. So yeah, it's not an act of peace. So maybe it's not surprising when Buffett comes out so clearly and says that it's an act of war. But just so that we're giving Buffett a fair shake here, again, he words things very carefully, and at no point did he actually address specifically Trump and Trump's policies along this way. But he just spoke as a general matter that when you do implement protectionist trade policies and you use trade policy as a tool to advance other interests, it's not a good thing.